Good afternoon, good evening, whenever you're watching. Welcome to my channel. Welcome to another video. And we got a lot to discuss today. We had an inflation report that came out this morning that, it's going to put some pressure on the Federal Reserve next week when they have their meeting on April 30th and May 1st. It's going to put some pressure on them to do what? Perhaps even increase interest rates. Now, I know nobody wants to hear that, but yeah, they may have to consider increasing interest rates based on this information we got this morning in this inflation report, which we will cover in detail. Well, guys, if you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me if you don't mind. I really would appreciate it. Also, be careful down in the comment section of the videos. There are a lot of scammers, a lot of spam. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Don't let these people scam you. If it sounds too good to be true, it probably is. I always tell you guys, do not respond to any of these comments down in the comment box of these videos that I do. Don't respond to any of them. Please don't, because they're not supported by me. They're not endorsed by me. People are down there scamming, so be careful. All right, be careful. Also, if you don't mind, do me a big favor, get down to the description box, click on that Instagram link, Richard Fain, Millionaire Mentor. Click on that Instagram link, give me a follow, and then send me a DM. And just let me know that you're rocking with me. And certainly I would like to say thank you for rocking with me. So if you don't mind, get down to the description box, click on that Instagram link, Richard Fain, Millionaire Mentor, give me a follow. And let's get this Instagram page up and popping, if you don't mind, as the young folks say. Second thing I want you to do for me is consider Moomoo. Click on that Moomoo link. First link down in the description box. Moomoo is going to give you 10 free fractional shares of the Magnificent Seven. A couple of those companies, Microsoft and Alphabet, had their first quarter earnings report yesterday, and Alphabet knocked it out of the park. Shares are up 11% today. And I think a couple days ago, I told you guys, put Alphabet on the short list. See, I'm telling you guys, dropping little breadcrumbs. I don't know how many of y'all listened, but I told you a couple days ago, I believe it was Monday or Tuesday, I said, put Alphabet on the short list. Guess what? Had you put them on the list and went out and executed and purchased your some, guess what right now you'd be? You'd be up 11%. Guys, this thing ain't rocket science. You gotta take the information and execute on it. I'm giving you the information every single day. Now Alphabet is up 11%. Had you went and put it in the portfolio Monday and Tuesday, even Wednesday, you'd be up 11% right now. Alphabet. Microsoft up 2%. Overnight, just 11%, 2%. That's the Magnificent Seven, guys. That's the Magnificent Seven, right? Remember I told you a couple days ago, it might have even been yesterday. Remember I told you about Meta. Meta was down like $60, $70 a share. You gotta pick this stuff up, man, when you can. This is how you build wealth. You gotta pick this stuff up. So get down to the description box, click on that Moomoo link, get yourself 10 free fractional shares of the Magnificent Seven, right? Apple, Microsoft, Meta, Alphabet, Amazon, Nvidia, and Tesla. Why not get your 10 fractional shares for free by opening your Moomoo brokerage account, putting $100 in your Moomoo brokerage account, $100. Then what do you do with that $100? You can continue buying fractional shares of the Magnificent Seven, or you can take another direction and go buy yourself an S&P 500 ETF that tracks the S&P 500 index, right? You can buy yourself a tech ETF. You can buy a healthcare ETF, right? Many things you can do with that $100 to start building wealth. And then you got to use the Moo account to continue consistently investing in your pot of gold at the end of the rainbow fund by buying assets every single month, right? And stay plugged into the YouTube channel. I'm dropping little nuggets every day, guys. And again, I'm not telling you what to do. I'm not trying to be an expert. I'm just telling you I've been doing this for 30 years, man. I've been doing this for 30 years on my own. Just, doing my thing, building wealth. I'm just trying to pass on that knowledge to you. You can accept it or you can not accept it. That's on you. But had you listened to me a couple days ago when I told you the opportunity with Alphabet, you'd have been up 11% right now. Boom, just like that. Couple days, up 11%. So get down to the description box, click on that Moo link, get your 10 free fractional shares of the Magnificent Seven when you open your account and put $100 in there. Guys, don't delay. Get started today. You want to build wealth? You want to pass along generational wealth to your people, to your family, to your charities? Do you want to be able to do that? Do you want to build wealth? You live off the wealth and then pass that wealth on to your family? Guys, this is how you do it. This is how you pass on wealth. All right? So get down to the description box, click on that Moo link, go get that free stock, go get that free money. Last thing, and we're going to dive into the meat and potatoes. I need you to do me a favor. And thousands actually tens of thousands of you guys have already done this. Have went and checked out my new website, Richard Fain Millionaire Mentor website. Second link down in the description box. Click on the website. Go take a look at it. Thousands of you guys, man, tens of thousands of you guys, like 30,000 of you guys have already went and checked it out, right? And you found the digital products. And a lot of you have made an investment in yourself and purchased these digital products. Credit repair, credit restoration, invested in index funds through obviously stock market investing, paper assets, drip investment, reinvesting dividends back into building. All of you, how to start a business or how to start an online business, right? If you got an existing brick and mortar business, how to grow that business, right? What else do we got on there? We got Millionaire Mindset ebook that walks you through how to change your mindset from where it is today to a millionaire mindset. Big difference. Regular schmegular mindset, millionaire mindset, two different things. This will walk you through how to change your mindset and get yourself on a path to get to your pot of gold at the end of the rainbow. So go check out the website. Check out the digital products. Also, consider the paid membership club. It's growing like gangbusters, guys. We got a lot of people who have said to themselves, you know something? I'm going to make an investment in myself. I'm going to tap into this guy. He's going to be giving us unfiltered access to him for 90 minutes every single week in a private membership group where we're going to discuss everything finances. I'm going to be able to ask this guy questions directly. And not that I'm some guru, guys, but like I said, guys, I've been doing this for 30 years. I've been building real estate portfolio, buying and selling real estate for income for 30 years. I've been in the stock market for 25 of those years. I was a commercial banker at a big boy bank, Bank of America, Wells Fargo, for 25 years. Working with high net worth individuals, very affluent individuals, people who had $100, $200 million in real estate assets. Those were my clients. So I know what I'm doing. I'm not saying I'm an expert. I'm not saying I know more than the next real estate guy. I'm just telling you what I have to offer is real life experience. I didn't read this in a book. That's the difference. See, I didn't read some book and now all of a sudden I'm an expert in real estate. I didn't read some book and now all of a sudden I'm an expert in the stock market. No, this is real life. I did everything that I talk about. I've done it. I've done it. And I have information to pass on. if you're willing to take that information. So think about signing up for the paid membership club. It's a private membership club. Nobody will have access to that unless they belong in that membership club. There won't be a link where somebody can go just tap in. Won't be that. Only club members. If you're a club member, a paid club member, you get access to it. If you're not, you don't get access to it. But you still got the YouTube channel if that's good enough for you, right? Some people want more. Some people want more of an intimate financial relationship with me. And that's where you would be if you want to join the membership club. You get that financial intimate relationship with me. So second link down in the description box. Make sure you click on the website. Check out them digital products. Get yourself signed up for the paid membership club. We're going to kick this thing off in May. And we ain't looking back. Every morning I'm in there dropping some type of positive message to my folk, right? To my family, to my club family. I'm dropping a message in there every morning just to say, hey man, I'm thinking about you. I know what you're going through. We in this thing together, but hey, we gonna make it out of this thing. There's light at the end of the tunnel. Just keep progressing. Keep a positive mind. Keep doing what you need to do. There's light at the end of the tunnel. Well, all right, guys, let's move on into what we're going to talk about today. What's that? That's going to be inflation and how the Fed is going to have no choice but to do something. They got to do something. They got to, because inflation is not coming down, right? It's a little bit sticky. So again, like I said the other day, we can look at this as bad news. Oh, the world's finna end. Oh, that's all this guy's talk about is gloom and doom. Oh, I'm going to go to another channel that they just talk about only good things. You can look at it that way, or you can look at it as an opportunity. Ooh, shoot, there may be an opportunity to get me some net worth out of this thing. I don't know. It's up to you. You can look at it as bad news, or you can look at it as opportunity. Those are your two choices. You decide. You already know where I'm at. I look at it as an opportunity to get rich. I'm sorry. That's the way I look at it. I look at it as an opportunity to get myself to my pot of gold at the end of the rainbow, where I can control 100% of my time. That's where we want to be, guys. I don't want somebody else controlling my time. But if you don't have wealth, they are. Guess what? We talk about passing on generational wealth. Guess what? The only way you pass on generational wealth is you got to build some wealth. You got to do something to build wealth. You can't pass on generational wealth if you haven't built any. You got to build some. You got to pay the price. You got to build some. If I don't pass on generational wealth, what am I passing on to my people? What am I passing on to my kids? Right? We all want to leave this place and pass something along, I hope. What our history tells us, though, we pass on poverty. That's what our history tells us. I'm not saying that's going to be going forward. But when you look at what's happening, guys, history tells us we don't pass on wealth. History tells us we pass on poverty. Who wants to pass on poverty to their kids? Nobody. Most people want to pass on wealth. But if we don't do what we need to do necessary, we're going to pass on poverty. That's what we're going to pass on to them. If you want to change that, if you want to change our history of passing on poverty to our kids, then you got to do something about it right now. Right now. You got to do something about that. Do I want to pass on poverty or do I want to pass on wealth? You make the decision. It's up to you. Me personally, I'm passing on wealth. Listen, wealth is defined by you, not me. I don't define what your wealth is. But one thing I can tell you what your wealth should do. Your wealth should be able to take care of you. So if I need $5,000 a month to take care of me, I need to build my wealth where it creates $5,000 a month. If I need $10,000 a month, I need to build my wealth that it creates $10,000 a month. Whatever your number is, you got to build wealth to generate that income. And then what do? You take that wealth and you pass it on to your people, to your kids, to your family, to your charitable organizations, right? I want to leave a financial legacy too, guys. Don't get me wrong. Money is not going to make nobody happy, right? But I want to pass on a financial legacy to my folks, to my daughters. That's important to me. What about you? What's important to you? And what you're doing today, will it get you there? What you're doing today, will you pass on wealth or will you pass on poverty? And poverty, guys, is just not passing on money. See, poverty can also be an attitude. I can have a wealth attitude that I pass on, plus some money, or I can have a poverty attitude and no money to pass on. I'm gonna pass on something, right? See, it ain't always about the dollars. It's about mentality. For a lot of us, we pass on a poverty mentality. Why? Because we're living paycheck to paycheck. We're living in credit card debt. We're living on more than what we make. What do you think that is? That's a poverty mindset, guys. When I'm living on more than what I make, I'm living paycheck to paycheck. I have no emergency fund. I'm straddled in debt. What do you think you're passing on to your people? You're passing on a poverty mindset. I want to pass on a wealth mindset with a little bit of cha-ching behind it. I want a little bit of cha-ching with a really, really good wealth mindset. So when I'm out of here and my daughter's here and they're faced with a financial difficulty, they know how to get through it. They know how to turn on that wealth mindset and get through it. See, oftentimes we pass on this old poverty mindset, and guess what happens? When our kids get into a financial situation, what do? The only thing that comes on is the poverty mindset. You've not passed on a wealth mindset to them, so they don't even know how to handle that. That's what I'm saying, right? So all I'm telling you guys is you can look at this information we're getting ready to go through as a bad thing, the world's going to end thing, or you can look at it as, whoa, what an opportunity for me to build some wealth if I go ahead and execute. What an opportunity to build wealth if I execute. So let's move into this inflation report that came out this morning. Key Fed inflation measure rose 2.8 in March from a year ago, more than expected. What does that mean? Inflation showed little signs of letting up in March. With a key barometer the Federal Reserve watches closely, showing that price pressures remain elevated. What does that mean? Price pressures. Prices are still going up. See, here's the thing. As long as prices keep going up, guess what it does to you? It puts more pressure on your pocketbook. It puts more pressure on your pocketbook, right? As prices keep going up, it puts more pressure on your pocketbook in order to provide for your family, right? Prices keep going up, but your pocketbook ain't going up as fast as the prices of your goods and services. So that puts pressure on you. That puts stress on you. Because what you're going to say is goodness gracious, last year I could go to the supermarket with $150 a week and take care of the family for the week. Now that $150 won't do it. I need more like $225. See, that's that pressure inflation puts on your pocketbook. That's the pressure. That's what they're talking about here. It's pressure, right? Pressure remain elevated. The Personal Consumption Expenditures Price Index, which is PCE, right? Excluding food and energy, increased by 2.8% from a year ago in March. See, we're in April, but we're looking at the March report. In May, we'll look at the April report. It's a 1 month lag. So that's why they keep saying March, because we're looking at March's report, but we're looking at it in April because it's a 1 month lag, right? Just for so you folks, well, we're in April. What are you talking about the March report for? Because the April report ain't out. It's 1 month back. I know my people. I'm just explaining it because I know what people go say. Well, you're talking about March. It's April. Well, you don't get the April report until May. 1 month lag. So just cool your horses, Johnny. Cool your horses, Johnny. We'll get there. The same, okay, let's start here. The personal consumption expenditures price index, excluding food and energy, increased 2.8% from a year ago in March, the same as in February. So February and March, 2.8% increase year over year. They're talking about year over year, right? What they're telling you, price is still increasing, man. They're just still increasing, right? So here's the thing. The Commerce Department reported Friday that was above the 2.7 estimate from the experts. So the experts, our economists, our experts wanted to see prices go up year over year 2.7, but they went up 2.8, hotter than expected, right? Bad news, good news, let's talk about it. Bad news, opportunity, let's talk about it. Including food and energy, the all items PCE price gauge increased 2.7 compared to 2.6. So you got core and then you got everything. Core, they take out energy and food because it's volatile. The prices are volatile. All items mean they add back in food and energy, and we still missed the boat. We still came in hotter than expected. On a monthly basis, both measures increased 0.3% as expected, and equaling the increase from February. So we look at these prices year over year, and then we look at them month over month. Now, month over month, we hit expectation 0.3. So from February to March, 0.3% increase in prices. That's what the experts thought would come in, and it came in exactly what the experts thought. Markets showed little reaction to the data, with Wall Street poised to open higher. Why did the market not really take that as bad news, guys? Because the market already knows what's happening right now. See, the market knows the Fed ain't finna decrease interest rates no time soon. So they're not surprised. Oh, okay, inflation is still going up. We knew that. No shocker there to us. We already took a lot of our money out anyways. We've taken our profits. We're kind of sitting back, waiting and seeing. So no real effect on the stock market this morning. Because the stock market, like I said, 75% of the stock market activity is from big boy investors, right? Big Wall Street firms, right? Billionaire investors, hedge funds, institutional investors. They already know the Fed ain't reducing interest rates anytime soon. So just because they got a report that's saying inflation is still a little sticky, okay, whatever. We already know that they ain't finna reduce rates, so we're good. Wasn't a real fluctuation in the market is what I'm saying. Wasn't a real fluctuation because investors already anticipated this. They already knew it was coming. See, when they know it's coming, they prepared themselves for it. They moved their money where they needed to move it. It's not a surprise, right? So they already knew this was coming. So the market didn't sell off bad or anything like that because the investors already knew this was coming. Now, the Treasury yields failed with the benchmark 10-year note at 4.6. Why did it fall? Because the market didn't really sell off. There was not a whole bunch of money taken out of the market fleeing to US Treasuries. That's why the US Treasuries fell a little bit. Had there been a real sell-off out of the stock market because of this report this morning, you would have saw US Treasuries go up. Because when these 75% of investors, these big-time investors, these billion and trillion-dollar investors, when they take money out of the stock market and move it to Treasuries, it sends Treasuries up. Why? Because there's more demand for Treasuries. This morning wasn't that much demand for Treasuries, so it didn't go up. Right? Didn't go up. Wasn't that much demand because the market, institutional investors, big boy investors, this was no surprise to them that inflation is still sticky. It wasn't a surprise. It wasn't a shock to them, right? Plus they've already moved their money out earlier in the week anyways. A lot of them have already moved money out of the stock market earlier this week. No big deal, right? So let's keep moving on. So the 10-year note, 10-year Treasury note, at 4.6, down about 0.4 percentage points on the session. Why is that important? Why is US Treasuries important? Because that's a safe haven for rich people. It's a safe haven for wealthy people. It's a safe haven for institutional investors, billionaire investors. That's a safe haven. That's where they can take their money and put it over there when they're rich. They're already rich. Oh, golly, 4.67%, that ain't that much. Yeah, but when you're rich and you're wealthy and you got millions and millions of dollars, billions and billions of dollars, that's a lot of money when you're talking about 4%, almost a 5% return on $1 billion. Calculate that. See, when you're rich, you can do that. When you broke and you ain't rich and trying to get rich, what are you fleeing the US Treasuries for with your $1,500 that you put in the stock market? You ain't gonna get that money. You ain't gonna get nothing. Why would I take my $1,500 out of the stock market and flee to US Treasuries with $1,500? It don't make any sense. No, I need to leave my little 1,500 in there and put 1,500 more in there and keep 1,500 more and build me some wealth and get to my wealth number. Then I can move my money to US Treasuries and make some real money. But when I ain't got no real money, it don't make no sense taking my money out of the stock market when I'm not at wealth, guys. When I'm trying to build wealth, what am I taking money out of? The wealth builder. The stock market is the wealth builder. Not US Treasuries. That's not a wealth builder. No. That's an income generator. Right? See, US Treasuries are an income generator. It's not a wealth builder. It's an income generator. The stock market is a wealth builder. It's a wealth builder. So if I'm in the building stage of wealth, where do I want to go? I want to go to the wealth builder, or do I want to go to the income generator with my $1,500? I want to go to the wealth builder because I want that $1,500 over the next 10 years as I continue to put it in to grow to $1 million, to grow to 500,000. Now, if I want to take my money out of the stock market and go to the income generator, which is US Treasuries, now I do that. Because now I can take 500,000, $1 million bucks, put it in a 5% instrument and get me $50,000 a year in income. Now I go to the income generator. But when I got $1,500, I should be in the wealth builder, which is the stock market. Once I build my wealth, I take my wealth and go to the income generator, which is US Treasuries. That's what your big boys do. They already rich. They already got wealth. They dibble and dabble in the stock market, pull their money out, go to the income generator for 3 or 4 or 5 months, a year, come out of the income generator, throw it back into the wealth builder generator. That's what they do. But we don't have that option because we don't have enough wealth yet. Some of us do, but most of us don't. Let's be honest. Most of us do not have that kind of wealth yet. We're trying to build that kind of wealth. So you got to stay in the what? Wealth builder, right? You got to stay in the wealth builder. That's the difference between the two. Those are the two markets, right? You got the wealth builder, which is the stock market, and then you got the income generator, which is treasuries. The only time I go to treasuries when I already built my wealth. There ain't need me to go on to treasuries with my $1,000 a month I'm trying to put in. It's not going to build no wealth for me, man, at no 4%, no 4.67%. I ain't going to get it. I'm going to have to do that for 100 years. No, I need to go where I can get double, triple, quadruple that 4 points. That's where I need to go. Show me that place. I need to get quadruple, triple, double. Right? If I'm trying to build wealth, it makes sense. If I'm trying to build wealth and multiply my money, I need to go to a wealth builder, which is the stock market. If I've already built my wealth and I need income, I go to US Treasuries, right? All right, let's move on. Futures traders grew slightly more optimistic about the 2 potential rate cuts this year, raising the probability to 44% according to CME Group, a Fed watch gauge. Inflation reports released this morning were not as hot as feared. So even though the report came out and it missed expectations on a couple of things, the market still looked at it as, okay, it's not as bad as we thought it could be, right? That's basically what they're saying. The market said, that's why you didn't see the market sell off, right? It is okay. It wasn't as bad as we thought. And guess what that is, guys? You got to have some optimism. You can't be pessimistic all the time. They got to have some optimism. And this is optimism, right? This is optimism saying, at some point the Fed gonna reduce these rates. Okay, 2 rate cuts, not 3, but 2. Let's be optimistic here. And at some point you got to be optimistic, right? And that's all these analysts are doing and these experts are saying is, hey, it wasn't as bad as we thought it would be. But investors should not get overly anchored to the idea that inflation has been completely cured and the Fed will be cutting interest rates in the near term, said George, whoever his last name, Chief Investment Officer at Key Wealth. The prospects of rate cuts remain, but they are not assured. And the Fed will likely need weakness in the labor market before they have the confidence to cut. Remember, we talked about the labor market, I don't know if it was yesterday or the day before, where it's still relatively a hot labor market. But there are signs that it could be cooling off when you look at what? The jobless rate, which is AKA unemployment. Unemployment is up year over year, 3.4% up to like 3.8%. That's a sign that there could be some softening coming in the labor market. That's a sign, guys. If unemployment is up year over year, that's a sign. How do we combat that? We got to go get us some side hustles, right? That's how we defeat this primary income might be taken away from it. I got to have some side hustles. So don't trip out over it. Don't get all freaked out. Just go get you some side hustles. Just go get you some side hustles and you'll be okay. You will be okay. Consumers showed they are still spending despite the elevated price levels. So a lot of people might say, well, golly, man, if prices are going up, why are people still spending? Well, people got jobs. People got jobs. People got a ton of equity in their house. They probably don't put an equity line on the house. Let's be honest. People, they don't care if they playing prime plus 3, they paying 11% on the equity line. They still got one because people got a ton of equity still. People who bought their houses, man, around the pandemic, they got a ton of equity. Pre-pandemic in 2020, these people got equity, man. So they done tapped into equity lines and put equity lines on the house, tapping into all the little equity, and they got jobs. That's how people still spending. They got jobs. But you take them jobs away, it's going to be a disaster. And that's why I'm trying to tell you, you got to be careful and don't be overconfident like some consumers are. They're overconfident. They got jobs and they're spending their equity line money, right? They're spending all the equity in the house through their equity line. Some of y'all know what I'm talking about. And I don't need you to chime in on it, but I know some of y'all know what I'm talking about. Y'all don't put equity lines on your house and done stuff with the equity line that you shouldn't be doing, right? I don't mind you putting the equity line on the house if you're investing in assets that create income, but don't put the equity line on the house and go put a new kitchen in that ain't gonna do nothing. Oh, I'm gonna put a new patio deck. That's gonna increase the value of $100,000. No, it's not. Don't put no money in your pocket though. You improving something that ain't gonna put no money in your pocket. Come on, guys. We gotta stop this. I keep telling you, if it ain't putting no money in your pocket, don't spend your money on it. Please don't. Consumers show they are still spending despite the elevated prices. Personal spending rose 0.8% on the month, a touch higher than the 0.7 estimate, though the same as February. Personal income increased 0.5% in line with expectations and higher than the 0.3 increase the previous month. Personal savings fell. Y'all think I just be talking, man, when I be telling y'all about these savings accounts. I'm not, guys. You see, personal income slightly went up. What happened to personal savings? It went down. It went down. I'm telling you, people are running out of money in their personal savings. We're going to be dead broke here in a minute with personal savings. People are running out of money with personal savings. Personal savings rate fell to to 3.2%, down from 0.4% from February, and 2 full percentage points from a year ago. As households dipped into their savings to keep spending. Boy, I tell you, in America, we are a country full of spenders, boy. We ain't finna save nothing. Except y'all, because I know y'all rocking with me, and I know y'all saving and then / investing. Except my folks, we saving and investing. The rest of y'all out there ain't doing that. I got y'all back. My folks, we saving and investing, at least I hope. My fingers crossed, right? Fingers crossed. But man, can you imagine going from 5.2% in savings rate down to 3.2? Wow. The report follows bad inflation news from Thursday. We reported on that yesterday, and likely locks the Fed into holding the line on interest rates, likely through at least the summer, unless there is some substantial change in the data. The Commerce Department reported Thursday that PCE in the first quarter accelerated at 3.4 annualized rate, while gross domestic product increased just 1.6. We talked about that yesterday, about GDP, how it only went up 1.6. And in the fourth quarter of last year, it was 3.4. Now it's 1.6. That's a shrinkage, guys. That's our economy shrinking, not growing. It's shrinking, right? From the last quarter. Your last quarter of 2023, we had a GDP of 3.4%. First quarter of 2024, GDP is 1.6. Our economy is shrinking, but our prices are continuing to go up. I tell you, the economy is shrinking, but prices are still going up. We're still spending like a banshee. Just spending crazy. Spending crazy, but yet and still, economy is shrinking. Got to help me out with that one. Got to help me out with that one. With inflation still 2 years after it began its initial ascent into the highest level in more than 40 years, central bank policymakers are watching the data even more intently as they contemplate the next moves for monetary policy. The Fed targets 2% inflation, a level that core PCE has been above for the past 3 years. Let me help you out here. Core PCE has not been at 2% for 3 years. And it's still not there. It may never get back there, to be honest with you guys. Just my opinion. It may never get back to that 2%, but it hadn't been there in 3 years. The Fed watches the PCE in particular because it adjusts for changes in consumer behavior and places less weight on housing costs than the more widely circulated CPI inflation report from the Labor Department. See, they want to see the Fed want to focus more on consumer behaviors, right? Whereas, and that's what the PCE does. It's focused more on you and our behaviors with spending money, right? And then the CPI report is heavily weighted on shelter costs and that kind of stuff. Some of that stuff is outside of you and I's control. We can't control rent prices, right? Somebody else control that. We can't control rent prices. So the Fed is saying, CPI is important, but we really focus on PCE because we really want to focus on consumers' behaviors, not, just on the rental rate going up. Or both are important, but the Feds, they hang their hat more on the consumer inflation index, which is PCE. Matter of fact, core PCE, right? So while they watch both headline and core measures, Fed officials believe that ex-food and energy figure provides a better look at longer run trends as those two categories tend to be more volatile. Services prices increased 0.4% on the month, while goods were up 1%. I'm sorry, 0.1%, reflecting a swing back in consumer prices as goods inflation dominated since the early days of the COVID pandemic. Food prices actually showed a 0.1 decline on the month, while energy rose 1.2. On a 12-month basis, service prices are up 4%, while goods have barely moved, increasing just 0.1. Food is up 1.5, while energy gained 2.6. So there you go, guys. There's your PCE report, which focuses more on, like I said, consumer behavior. And not a crazy bad report, but it puts the Fed in a situation where they can't reduce interest rates. This is the report they use, right? More so than any other inflation report. It can't do anything. So when they meet next week on Tuesday, April 30th, and Wednesday, May 1st, I don't expect much out of them. They're definitely not going to decrease rates. I don't believe they will increase rates. They will hold rates exactly where they are for longer. That's what they'll do. That's what they'll do. What does that mean for you and I as investors? Well, it means a lot of our favorite companies, AKA the Magnificent Seven, get down to the description box, click on that Moomoo link, get your 10 free fractional shares of the Magnificent Seven for free. They're going to give them, those are the top 7 companies in America, guys. All big boy, all blue chip. I'm talking about financial titans, but fast growing. Like I told you, earlier this week, you got your little self into Alphabet like I was recommending, you'd be up 11% today. Alphabet had their earnings report come out yesterday, knocked it out of the park, home run. Up 11%, boom, just like that. But see, we don't execute. We got a hard time executing. Some of us think we got to know everything before we execute. You ain't got to know much. I don't know much. I execute every day and I don't know much. I don't know much. I got a lot of experience just from doing, but technical, I don't know much technical. I don't know a lot of technical things about the stock market, guys. I don't know a lot of technical stuff. I know a lot of real world experience executing stuff. That's what I know. I don't know nothing about, okay, let me read this manual. Let me go through the earnings report. Oh, what is the PE ratio? What is the, well, if that's lower, that should be higher. I don't know any of that. That's when people email me about technical questions, I send them to the $1 trillion research lab. I don't know anything about no technical aspects of none of this. All I know is I took my money every single month, and this is what I put it in, and now I got a big old pot of gold at the end of the rainbow. That's all I know. That's all I know. I don't know nothing about the technical aspect of the stock market. What I do know is the real life aspect. Taking a certain amount of money every single month, put it in big boy blue chip paper assets, and doing that over a long period of time, you get rich. That's all I know. I don't know nothing about the technical aspect. You want to learn about that? Go to the $1 trillion research lab and type in whatever you want to type in. They'll give you that. I don't know nothing about the technical aspect and don't want to know anything. I don't need to know anything about nothing technical about the stock market. All I know is if I would have invested in NVIDIA 10 years ago, if I would have invested $10,000 in NVIDIA 10 years ago, this is all I know. 10 years ago, $10,000, it'd be worth $1.7 million today. That's all I know. See, that's all I need to know. That's how money. So guess what I say to myself? 10 years ago, if I would have invested 10,000, it's 1.7 million. What if I invest 10,000 in the next 10 years? Could I get anywhere close to that? I think I can. See, that's all I need to know. Why do you think that, Richard? Why would you think you can't? Maybe they're already done with all their growth. No, they're not. Over the last 8 years, they 12x'd their revenue. They only got $60 billion, guys, in revenue with a $2.2 trillion market cap. Do the math. Microsoft got what, 300 billion in revenue? Guys, they ain't even close to where they're going. I'm telling you. See, this is the thing. We get hung up on all this other crap, this technical crap. No, this is where they're going. They're the third most valuable company in the world, behind Microsoft and Apple. They got $60 billion in revenue in 24. They're going to at least 3x that over the next 10 years. And I'm going along for the ride. My thing is, if I can put $10,000 in today and just leave it in there for 10 years and it's worth $500,000, I win. I'm a winner chicken dinner, boy. That's what I'm trying to tell you. But ask me anything about the technical aspect of it. I can't tell you. Because that's not important to me. I'm a doer. I'm not a reader. I'm a doer. Some people are just readers. They want to read everything, but don't ever do nothing. See, I don't read a lot, but I do a lot. I'm the reverse, right? I follow success. This is what I'm trying to tell y'all, guys. I follow success. That's all I care about when I'm investing my money. Has it been successful in the past? And what does the future look like for success? That's the only two things I need to get accomplished. Do I care about all this other stuff? No, I do not. I let the experts do all that. All I care about is how can I multiply my money in this asset. So get down to the description box, click on that Momo link, go get that 10 free fractional shares of the Magnificent Seven. Put yourself in a position to win and start putting money in there every single month, guys. Down in the description box, first link, click on that Momo link, get started today, and get yourself 10 fractional shares of the Magnificent Seven and get ready to build some wealth, guys. Get ready to build some wealth. Let's go into, and this is a little sidebar. And again, guys, I'm not bringing this up to get political or anything like that, because that's not my thing on this channel. The reason I'm bringing this up and I'm reading this to you is because it has something to do with the Federal Reserve, which does have something to do with the financial world that we live in and trying to live in, right? Because you got to understand the Federal Reserve right now, these guys are sort of they're sort of a standalone body, right? They're sort of a standalone body. Nobody really technically controls the Federal Reserve. It's not technically a part of like Congress or, you know, the White House or the Treasury Department. It's not really a part of that. It's more of a standalone. Now, it does have oversight by Congress. So Congress can call Jay Powell in and talk to him, but they can't make Jay Powell do nothing, right? But one of your presidential candidates says he wants to be a part of the Fed. He don't want the Fed to be standalone and body. He want to be a part of it. He wants to be right in there making the interest rate decisions with the Fed. This is what one of your presidential candidates, this is what he's proposing. And I thought it was interesting. So I thought, hey man, let me share this with my group, because if he wins, that could drastically change the landscape of the Federal Reserve. Right? They operate, what's the word I'm looking for? And this might be the wrong word, but what's the word I'm looking for when they operate independently? Is autonomous the right word I'm looking for? I don't know if that's the right word I'm looking for, so let's stick with independent. Autonomous might be the wrong word in there, so if it is, forgive me. Let's stick with independent. So the Fed should operate independently. Should operate independently from Congress, the White House, the Treasury Department. You know what I'm saying? They should operate independently, right? This presidential candidate, he want to be a part of it. He want to be in on the meetings when they're talking about increasing interest rates, decreasing interest rates. He want to be a part of that. So I thought it was important that we talk about this, because if he's elected, Federal Reserve might change. So let's take a look. Trump advisors are considering plans to dramatically revamp the Fed, says Wall Street Journal. Okay? Again, I ain't picking sides. I ain't got nothing against former President Trump. I ain't picking sides. I'm just reading the news. You guys decide how you want to feel about that. But I thought I'd give it to you because it has to do with the Federal Reserve. Former President Trump, political operatives are putting together a plan that would give him unprecedented influence over the Federal Reserve. And again, hey man, I'm just telling y'all what's brewing here. Y'all do whatever you want to do with it, but I'm just giving you what's brewing here now. Will give him unprecedented influence over the Federal Reserve. Right now, no president has that. Don't get me wrong. I'm pretty sure, behind closed doors, the current president, he might be able to send a note to the Fed, but he doesn't really sit in on the meetings. And you know what I'm saying? So unprecedented influence over the Federal Reserve, including a provision that could make him an acting central bank board member, which has never been done, I don't think. So he don't want to just give advice. He want to actually sit on the board. He want to be on the FOMC committee. He want to be sitting in there. He might want to be Jay Powell. He might want to be the next Jay Powell, plus the president. I don't know. I'm just telling you. This is what the Wall Street Journal is saying. This is what the Wall Street Journal is saying. That plan, which the Journal reported, described as highly secretive, is part of a 10-page document that suggests Trump, if elected, would be consulted on interest rate decisions. In addition, the Treasury Department would be used as an added check and balance to oversee the Fed's bond buying activities. Because y'all know the Fed buy a lot of bonds. That's how they pump money into they buy a lot of bonds from the United States government. A lot of bonds. That's how they pump money into the economy, right? They buy a lot of bonds, right? Along with those proposals, the draft contends that Trump could remove current Fed Chair Jerome Powell from office and require that the Fed policy be aligned with the administration's goal. While in office, Trump harshly criticized Powell and his fellow central bankers as they were raising interest rates and reportedly considered ousting him. Again, I'm not picking sides. I don't need no arrows coming at me. I'm just reading a report from the Wall Street Journal. Y'all figure out how y'all want to feel about that. I'm just reading a report from the Wall Street Journal. Why am I including this as part of my discussion today? Because it has to do with the Federal Reserve. That's what we talk about on this channel. We talk about the financial world that we live in. Federal Reserve is a huge part of our financial world. So of course, if there's a proposal by a presidential candidate to basically take over the Central Reserve, the central bank, I mean, he wants to take it over, we got to talk about that. We got to know this, because if we're going to the polls and we need to know what's all on the table. So that's all I'm doing here. I'm not picking sides at all. Trump campaign officials told the Journal that the draft proposal shouldn't be considered official. It's unclear what authority the president would have to take such bold steps on the Fed that traditionally has sought to insulate its activities from outside political pressure. A Fed spokesman declined to comment on the report. What do you guys think about that? I thought that was interesting, because I think that would be a first. Now, I'm no historian when it comes to what the president can do and his role with the Federal Reserve, and I'm no historian on that. So, hey, I'm sure some of you guys know more background on that than me, but I thought that was interesting that potentially you would want to, yeah, that's interesting. What do you guys think about that? Drop it down in the comments. Drop it down in the comments. I'm interested to know, and I'll poke around at the comments a little later on. But very interesting, very interesting position. Very interesting process or proposal. Yeah, very interesting. We'll see. We'll see what comes of that as this political thing starts ramping up, because of course in November you go to the polls. So we'll see if anything else comes of that as we get closer to election day. Let's move on. Let's jump into some stock market news, and then we'll button this thing on up. So S&P 5, here's the headline. S&P 500 and NASDAQ jump, boosted by Alphabet and Microsoft. Again, a couple days ago, hey man, put Alphabet on the short list. Remember I read y'all that article where it said the two companies that this particular person that wrote the article, two companies that they believed would be the most valued companies in the world. And Alphabet was one of them. Amazon was the second. Remember we talked about that a couple days ago. And I said, guys, put them on the short list. These guys, some of y'all listened, some of you probably didn't, right? If you listened, you're up 11% today. If you didn't listen, you just missed out on some wealth. You just missed out on net worth gain. That's why I keep telling you, I stop trying to read everything and be an expert in everything and start doing something, or you're going to be broke for the rest of your life. You're going to work for somebody for the rest of your life. Keep on reading. Keep on not executing. Keep on trying to be the expert. Keep it up. Keep it up. You're going to continue to pass on poverty to the next generation. You ain't going to pass on no wealth. And I'm just not talking about dollars, talking about mentality as well. Mentality and dollars. You're going to pass on both of them. Poverty or wealth. The whole point of listening is to do what? Take some action. If you ain't going to take action, what you listening for? If you're not going to take action and build wealth, why would you waste an hour of your time or 10 minutes or 15 minutes or 5 minutes of your time listening to me if you're not going to build any wealth? It don't make sense. This is not an entertainment channel. It's not. This is an education channel. I'm here to try to assist you in the very best way I can with my 30 years of experience to get yourself to wealth. Right? Guys, when I'm going through this stuff with you, you should be saying to yourself, okay, this guy has some credibility. He has done this for a while. He is on here every single day. I'm not sure why he would be on here every single day if he wasn't really genuinely trying to help people. Because I've already told you, if I was just here to make money and to rip you off, I don't have to be on here every day to do that. Trust me. I could be on here one day a week to do that. All I got to come on here one day a week and promise you the world and deliver you zero, and I can get rich. Just like many others do. Y'all know many others come on here and promise you the world, the 25, 30, 50, 100% return. Oh, buy a 100-unit apartment building, no cash in, no credit, no nothing. I just run some ads on YouTube, just promising you the world, deliver you nothing. I can do that in one day and get rich. I can do that in one day and get rich. I don't need to be on here 7 days a week to do that. So some of y'all might want to execute on some of this stuff, man. And again, fact check me, go out and do your own research, but execute. You don't get rich and wealthy unless you execute, guys. We got to execute. Okay, let's move on. Stocks jumped Friday as big tech names, Alphabet, Microsoft. Okay, Alphabet, Microsoft, what are they part of? Somebody help me out in the chat. What are those two part of that I talk about all the time? What are they part of? What is Microsoft and Alphabet a part of? What are they part of? Somebody going, there you go, Magnificent Seven. These are two of the companies in the Magnificent Seven. Big boys. Big boys. You're talking about the number one valued company in the world, which is Microsoft, and the number 5 valued company in the world, which is Alphabet. That's all. But yet and still, I get all these questions about these little pipsqueak companies I ain't never heard of. I'd rather take my $1,000 and try to put it in some little pipsqueak company ain't nobody never heard of. But when I tell you, you got the most valuable companies in the world, you try to act like, what about ABCD company? What in the hell would I want to invest in ABCD company for where they got no proven track record? They not even on the list of the most valuable companies in the world. They ain't even on the 1,000 most valuable company in the world list. But yet and still, that's where you want to put your money. I want to put my money in Peloton. Who? You talking about the guys who make these bicycles that go in your living room? That's who you want to put your money in? You talking about the jokers trying to charge you $7,000 for a bicycle to put in your living room? Come on, man. This is what I'm trying to tell y'all, guys. We got to stop this. Why in the world would I put money in Peloton when I can put my money in Alphabet? I can put my money in NVIDIA. I can put my money in Microsoft. I can put my money in Meta. Why would I put any money in Peloton? Y'all do know the pandemic over, right? Y'all do know their run is done. Ain't nobody finna pay no $7,000 for no bicycle to go in their living room. They might have did that during the pandemic because they couldn't go nowhere. People can go somewhere now. They can go to the gym. They don't have to spend $7,000 for no bicycle to put in their living room. They just go to the gym, pay $10 a month, get on the bicycle at the gym. I go to the community center where they live and get on the bicycle for free. I mean, why would we even be putting any money in Peloton? I don't get it, man. I don't get it. But I'm sorry, I digress. But it's just, I don't get it. People will email me about these companies they ain't never heard of. And I'm saying to myself, why would you put money in that company when you can put money in the Magnificent Seven, who had 100% ROI last year in 23? I'm not saying they'll do that this year, but they did it last year. And year to date, not year to date, but first quarter of this year, they were up 17%. Alphabet just jumped. Stock price jumped by 11% one day. Why in the world would you go put money in Peloton? Or any of these other little companies that people put their money in? I don't get it. But that's just me. That's just me. That's just me. Let's move on. The broad market, here it is. Stocks jumped Friday as big tech names Alphabet and Microsoft rallied on strong earnings, and traders poured through fresh US inflation data. The broad market index advanced 0.9%, while the tech-heavy NASDAQ climbed 1.8%. The Dow rose 130 points, or 0.3%. Shares of Alphabet jumped 11% following their better-than-expected first quarter earnings and headed for their best day since July 2015. The company also authorized its first ever dividend. See, you'd have been getting a dividend right now. Had you went and made the purchase, pulled the trigger, you'd have been getting a dividend right now. Man, I tell you. The company also authorized its first ever dividend, about $70 billion buyback. I don't know, man. Peloton doing that? Somebody tell me, is Peloton giving a $70 billion dividend? Did Peloton jump 11% yesterday? I don't know, I'm just asking. I know nothing about that little pipsqueak company, but I'm asking you. Did they jump 11% yesterday? Do they got $70 billion in their whole company? Is the whole company worth $70 billion? Probably not. But should I invest in Peloton? Yeah, go right ahead. Go right ahead. Microsoft added 2% on strong fiscal third quarter results. Big boy, heavyweight, most valuable company in the world added 2% to its share price. Come on, guys. Okay. Stocks also appeared to get a boost from March core personal consumption expenditures readings. We talked about that already. Those moves are helping Wall Street regain some of its footing after a down day. The blue chip Dow slid 375 points on Thursday after new U.S. economic data showed sharp slowdown in growth and pointing to persistent inflation. They're talking about GDP. Gross domestic product expanded 1.6% in the first quarter, compared to a Dow forecast of 2.4. So the Dow thought the economy would grow by 2.4%. The economy shrunk and only grew by 1.6. Right? A little bit of a sell-off yesterday because of that. We're still optimistic on the market. However, as we believe that rate cuts aren't necessary for the bull market to continue. This is what a chief investment officer at Independent Advisor Alliance said. Instead of continued economic expansion and growth in corporate profits, which are already seen from the largest companies in the market, are what will propel prices to go higher. Stock market. You got these big boy gigantic companies reporting right now, man, killing it. Alphabet, 5th largest company in the world. Stock price jumped by 11% despite interest rates high, despite inflation high. See, I keep telling y'all guys, oh, I'm gonna sit around and wait. I'm not gonna get in yet. I'm just gonna wait. They say it's gonna be a 20% correction coming, so I'm just gonna store my cash. I'm gonna store my cash and just wait. You missing all the upside. These companies still growing despite all of that. That's why I tell y'all guys, you better be in the market 365 days a year. I don't know how many times I'm gonna have to say this. You sit yourself on the sideline waiting on some phantom correction that may or may not happen, while Microsoft and Alphabet are increasing in value. While you get a company like Meta, even though its stock price dipped, it had nothing to do with its first quarter earnings. The first quarter earnings were stellar. The reason Meta dipped is because their CEO came out and talking about he want to start investing in AI, mixed reality and all this other crap. Well, they never will make any money. That's why their stock price fell. It didn't have nothing to do with their first quarter earnings. Their first quarter earnings were spectacular. But the market slapped them over the head because the market said, no, Facebook, stick to what you know. You know nothing about virtual reality. You know nothing about mixed reality. Stay out of that space. Stay in your lane. Your lane is providing people a venue where they can put photos and pictures and videos and funnies and all that stuff. Alligators eating deers and all that stuff. Stick to that lane and do your advertising. Do not try to go into some other lane where you're going to waste a bunch of money. That's why their stock price went down. And I even told y'all then, guys, you better get over here and take a look at Meta. The stock price is down $60 a share. Do you think it's going to stay there long? No. Go get that $60 a share and put it in your net worth. Who did it? I don't know. A couple of y'all maybe. Some of y'all out there busy trying to buy Peloton. Oh, I'd rather go buy Peloton than to buy Apple. I'd rather go buy Peloton than to buy Meta. I don't get it, man. See, this is what I keep telling y'all about the mindset. See, this is the mindset. See, here's the mindset of someone who says, you know something? All I care about is I need to get on the biggest and baddest and fastest, the most growth to build my wealth. Let me follow me a blueprint. I don't need to create my own blueprint because I ain't got enough experience to create my own blueprint. Let me just tag along on a blueprint that works. See, that's what I do. I ain't smart enough to create my own blueprint. What do? I go find a blueprint that already works. That's killer. And I jump on it. That's what I'm telling y'all. See, a lot of y'all want to go out and create your own blueprint, which you can. I'm not saying you can't. But if you ain't got the experience, if you ain't got the knowledge and the know-how, I wouldn't try to create no blueprint. I would just find me a blueprint that already exists that does exactly what I needed to do. And I don't need to know everything. I'm all in. That's all I do. I don't know everything about Alphabet. I don't know everything about Microsoft. I don't know everything about Meta. I don't know everything about NVIDIA. What I do know is they giants. What I do know is they multiply a lot of money and they've made a lot of people rich. I don't know how many people Peloton made rich. Maybe back in the pandemic days when they were like 2 cents a share and somebody bought them and they went up to $10 a share and they got rich. but not like these guys. They're not like these guys. They're not like NVIDIA. There's no way I would ever put a dime in Peloton over NVIDIA. Never. No way. No way. Oh, what about, what was the other one? Redfin. What about Redfin? It's $5 a share. Why would I put any money in anything that's $5 a share? Why would I take my hard-earned money and put it in a company that stock is $5 a share? Now, if I'm already rich, a billionaire, and I got $500 million to put in there and it go from $5 a share to $7 a share and I make 50 million, I might do it then. But if I got $1,000 and I'm trying to invest in something that's gonna multiply my $1,000, why would I put it in a $5 stock? I wouldn't, guys. I wouldn't take my $1,000 and put it in a $5 stock. I'd rather take my $1,000 and what? Fractional share myself into NVIDIA, fractional share into Meta, fractional share into Alphabet, fractional share into Amazon, fractional share into Microsoft, fractional share into Apple, fractional share into Tesla. That's what I would do with my $1,000. I wouldn't be taking my $1,000 and putting it in no $5 stock. See, this is where we get in trouble. And then all of a sudden, that little $5 stock goes sideways on us. Oh, I know the stock market was a scam. I knew it wasn't good. I knew it wasn't this. I knew it wasn't that. No, you just invested in the wrong crap. If you follow the blueprint and stick with big boy blue chip, you're good. And do it for a long period of time, you're good. But no, we don't want to do that. We want to create our own plan. We want to create our plan with Peloton and who are some of them other ones people be sending me? There be companies I ain't even never heard of, man. I would never in my life pay no $7,000 for no bicycle to put in my living room to ride. Oh, we got a screen here. You can go anywhere in the world on it. Just type it into the screen. No, you in your living room. You ain't in Italy. You're not in PCH Highway in California. You in your living room, looking at a screen. Oh, we're going to transform you into anywhere in the world you want to go. No, you in your living room. You in your basement. You in your bedroom. You ain't in that's it. Okay, I'll move on, man. Let me stop. I'm having a little bit of fun, but it's no joke. We got to stop this. Come on. I got a buddy of mine. He live in Dallas, Texas. And this is not even a buddy. This is like my brother. He like one of my younger brothers. And I got a couple guys like that. But I can remember during the pandemic, he bought all that stuff. I mean, he bought the bicycle, whatever them people were selling, he bought it. And right now to this day, he still got all that crap. And what's their stock price? $3 a share? Come on, man. We got to stop this, guys. We got to go big boy blue chip. We got to follow the blueprint. And we got to go big boy blue chip. Please, do me a favor. Follow the blueprint. Or find you a blueprint out there that has a proven track record of actually creating wealth. All right? Now, if I'm already at wealth and I want to fool around with some of these little bitty companies thinking, okay, I can put 100,000, 200,000 in, get me a quick flip, that's one thing. But if I got $1,000 a month, me putting it in Peloton, guys, that's not going to help you. I'm going to just tell you right now. That's just going to really, really discourage you. You got to take that $1,000 a month and put it in something like the Mag 7. You got to put it in the Mag 7. You got to put it in the S&P 500, right? You got to put it in like a tech ETF that's all full of heavyweights, like FTEC or VGT. You got to go S&P like VOO or SPLG and the Mag 7. Listen, man, if you just do those three, I was speaking to a gentleman yesterday, and obviously I'm not gonna call his name or nothing like that, but this gentleman got some wealth. I mean, he was a doctor. He's retired now. He has some wealth. But guess what? he want to double that wealth in the next 10 years because he wants to leave a financial legacy to his children. Plus, he wants to, he plans on living a little bit longer, and he wants to be able to enjoy some finer things. He already has wealth now. From our standpoint, he has wealth, but he's trying to double it. And guess what? All big boy stuff. All big boy stuff. That's what he's invested in. And going to continue to invest in. And he already got wealth because he understands this stuff that I be talking about, these investments that I'm talking about. You can't guarantee nobody anything in life, guys. There is no guarantees. But let me tell you something, man. I don't know. Listen, if the Mag 7 go out of business, I don't know what's going to happen to the United States economy. Because you're talking about 7 of the 15 top companies in the world in the Mag 7. And, they already have reached their growth. They're not growing. Guys, you better go take another look. You don't do 100% ROI in 1 year if you ain't growing. Something growing in there. How do you do an ROI of 100% if ain't nothing growing? How do you do 17% in the first quarter of this year if they ain't growing? Because see, that's the argument. Apple ain't growing anymore. I don't know what Apple's doing, but I know as a collective, they had a 17% ROI quarter 1, 2024. That's all I know. They outperformed the S&P 500. S&P 500 was like 10%. They were 17. I don't know. I don't know. Y'all help me out. Maybe I'm missing something. But I'm telling you, you better get a game plan because this 10-year window gonna go so quick. And I hate for you to look back on it and you say to yourself, golly, if I just would have executed. I had the information, I just didn't execute. For whatever reason, I was afraid to execute. Nobody is telling you to put your last dime in the stock market. I've already told y'all and I've went on record. If you're not financially in a position to invest, don't invest. Don't. But see, I got no other choice. See, I know my options. My options is wealth or broke. Those are my two options. Wealth, where I own 100% of my time and I get to live the lifestyle I want to live, or broke and I work for the rest of my life. Those are your two options. There ain't no in between. It's either I get to my wealth or I stay broke. And when I say broke, I don't mean you ain't got enough money to take care of yourself. You ain't got enough money to put a roof over your head. When I say broke, that means you're going to work for somebody for the rest of your life because that's the only way you're going to pay for your stuff. See, either you pay for your stuff by working for somebody or you pay for your stuff through your assets. Those are your two choices. There ain't no middle ground. No, you pay for your stuff through assets or you pay for your stuff through giving somebody your time and they give you a check. Oh, no, I own my own business. I don't care. Can you leave your business for 6 months and don't never go in for 6 months and still get a paycheck? Most of us can't do that because we are the business. You take us out of the business, there is no business. I don't show up to work one day, chaos breaks out because there ain't nobody else in there that know how to do nothing. Because most of the time, we work in the business, we don't work on the business. See, when we work in the business, we're the key person. Everything flows through us. So if I get sick or get bumped on the head and can't go in, nobody knows nothing because everything flows through me because I work in the business. When you work on the business, you got a team of people that run that business, whether you there or not, and it's profitable. See, that's working on the business, not in the business. Most of us work in the business. So if you take us out of the equation, the whole business crumbles. Just telling you guys, this ain't my statistics. This is the real statistics. Go out on the $1 trillion research lab. Most people work in their business. They don't work on the business. It's a big difference. So those are your options. Find something to invest in that's going to multiply your money by 8% annualized or better. That's what you got to be doing. Peloton ain't going to do that. It ain't going to do it. Somebody said in the chat, they $3.17 a share. Let me see what these folks are. And I ain't, listen, man, if that's your thing and that's your company, if that's your thing and that's your company, then great. I ain't got nothing against that. Let me see here. Let me see what they're doing today. Peloton. I don't even know how to spell that. How do you spell that? Oh, here they go. $3.16 a share. Y'all got to stop this, man. Y'all got to stop this, man. I mean, these people are down. They are down 87.46%. Negative. 87.48. Okay. All right, I'm done. Appreciate y'all, man. Appreciate y'all rocking with me. I got to get out of here. But do me a favor before we get out of here. Hit that thumbs up button for me. I would really appreciate it. Hopefully, man, you know, you guys have a sense of urgency and you understand where I'm trying to get you to here. I know we have some fun and I joke around a little bit, but in all seriousness, you got to build wealth in order to change something in your financial life. If you want to pass on a financial legacy to your folks, then you got to create some wealth. You can't pass on financial legacy if you haven't created any wealth. You got to create it. I'm trying to give you the tools to create it. All you got to do is execute. All you got to do is execute. You got to buy assets that actually have a proven track record of multiplying money, period. I've given you the Mag 7. I've given you SPLG. I've given you FTEC. I've given you VGT. I've given you VOO. I've given them to you. I've told you what they've done for my portfolio. But that's all I can do is recommend them to you. I'm not your financial advisor. I am not a financial advisor. I do not take money from people to invest for them, but I am an expert at my own opinion. And my opinion is these things work. They work. They work. Just saying. So get yourself down in the description box. Click on that Moomoo link. You know, you don't have to, but if you want to, click on it. Get yourself 10 free fractional shares of the Magnificent Seven. Free. I just gave you who these companies are. All big boy companies, guys. All multipliers. All wealth builders. Remember we talked about wealth builders. They're all wealth builders. Now, you can participate in them or not, but they're going to still be wealth builders. People getting rich every day in these stocks. I'm getting rich every single day, 365 days a year. My net worth is going up every single day because I'm in these big boy blue chip. They're going up every day, my net worth. Every day I look at my net worth is going up. Oh, the interest rate's too high. My net worth going up every day. Every day my net worth goes up because of these big boy assets that I'm buying. And guess what's going to happen when rates do finally come down? It's going to even go up more. All my opinion, but I'm an expert in my own opinion. Just telling you, sit on the sideline, wait for some market crash if you want to. Go ahead, miss all this upside. Miss it. See, here's the thing with me. I got best of both worlds. I'm in the market 365, taking advantage of the upside right now. If it does crash, I go to my cash reserves, throw more money in, and wait till it go back up. Because you know it is. It always does. It's not one time it's crashed, guys, and it didn't go back up. You just got to be patient. See, so I'm going to take advantage of the upside. I'm going to take advantage of the downside. It don't matter to me. Either way, I build wealth. Why? Because I'm in the market 365 a year. Either way, I build wealth. There's no lose for me. I'm going to win as long as I'm long term. And I got 10 years. I got time. I got 10 years. I got time. I promise you in that 10-year block, stock market going to do something spectacular. In this next 10 years, something spectacular is going to happen. There are going to be people that's going to build a lot of wealth in these next 10 years. And I promise you, I'm going to be a part of it. And Lord's will, in 10 years, I'm going to be back on this YouTube channel showing you. So be a part of that. Get down in the description box, click on that Moomoo link, get those free stocks, get that free money. Go to my website, the second link down in the description box. Click on the website. Get yourself over there and check out those digital products that can assist you in getting to your pot of gold at the end of the rainbow. Great digital products, guys. Make an investment in yourself. Stop sitting on the sideline looking for somebody to do something for you. No, do something for yourself. Invest in you. Investing in you is the biggest and best investment you will ever make in your life. You have to invest in you. Get over to the website, get some of them digital products, invest in you, and stop procrastinating. Look through the information, do exactly what the information tells you to do, and you're Gucci. And then get yourself over to the membership club. Join the paid membership club. We're going to kick this thing off in May. I don't care if we got 3 people in it. Those 3 people going to get everything they can get from Richard Fain in them 90 minutes. So I don't care how many people we have. Whoever we have in there, they're going to get all of me for 90 minutes. And I'm going to make it my personal mission to make sure that they get to their pot of gold at the end of the rainbow in these next 10 years. I'm personally going to tell them, if you rock with me for 10 years and listen to what I'm telling you to listen to, you're going to build wealth. That's my personal commitment to them. Now, I ain't got no guarantees, but I'm giving my personal commitment that I'm going to do everything in my power to help them get there. That's the personal commitment. It's not a guarantee. The guarantee is I'm going to do everything in my power to help them get there. That's the guarantee. Not that you're going to be a gazillionaire. That ain't the guarantee. The guarantee is when you leave out of these live streams, you're going to say, listen, this dude gave me value today. This dude gave me value. Now it's up to me to take that value and execute on it. Okay. All right, man. So appreciate y'all rocking with me. Y'all have a good rest of your Friday. I'll see you back here tomorrow, 10:30 a.m. Eastern time. I'll be here. I hope you be here. We're going to be covering some more stuff. So hang in there. Have a wonderful day. Do something to get yourself one step closer to your net worth you're looking for, your pot of gold at the end of the rainbow. Do something today. Do something today to get there, guys. Do something today to get yourself to that pot of gold at the end of the rainbow. Hit that thumbs up button before you get out of here. Y'all know I appreciate you for that. Like I said, get over to that Instagram page down in the description box, Richard Fain, Millionaire Mentor. Give me a follow on Instagram. Drop me a DM to say hello and let me know you're rocking with me. I really would appreciate it. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you guys on the next one. Peace.